The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the April 21st terrific Tuesday edition of today's hour two of the Trader's Edge. I almost said opening bell, did I not? But this is hour two of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything we can to have an extraordinary Tuesday. Of course, let's always remember what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. But what's scheduled is real. And I really want to thank you for scheduling your time with me here this morning. I'm honored by your presence. I'm here to serve you. Feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out and touch someone at 727-445-1044. Remember, if you've got a question, there's at least a dozen or so other people that have got that exact same question. So what a beautiful way to start out your day with a random act of kindness and call in for someone else. This is Terrific Tuesday. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading off 36 points. She's trading at 17,998. S&P is flat out here trading at 2,100 and just a tad above that. The NASDAQ Composite, she's the strong dog in the link out here, trading up 16 bucks at 5,010. Russell 2000 is flat. DAX is anything but flat. It's up 114 points. The FTSE's up 21. Gold's up $3 right now. Silver is up 6 pennies. Light sweet crude is up 9 cents. Leading the charge, the upside, we've got Vertex Pharmaceuticals up $8. That's up 6%. Chipotle up 1%. That's up $7. Echo Global Logistics up $6.50. Lam Research up $6.45. The ProShares Ultra Biotech BIB, that is trade to the upside. That's up 570. You've got Palo Alto Networks up about $5. To the downside, you've got the Packaging Corp of America, PKG. We'll go take a look at that. Harley Davidson, the hog. We'll take a look at that stock chart as well. That's off $5. Polaris Industries down 5. Perigo off about 4. Netflix off $3 this morning. Under Armour down 3. Stratasys, have a look at that for a while. That's down about $2.50. Again, 877-927-6648. Let's begin the day by taking a look at the ETF structures out here. What do we have going on inside of the QQQ ETF series out here this morning? Right now, you got the Qs having tested the swing point here from April the 13th. The high of that is 108.38. The volume out there is 17 million. You've done 8 million already today. Even if volume drops off, the Qs are pushing into that swing point with volume. Nonetheless, it still would need to close above 108.38. If you close above 108.38, that says you move on to the next swing. But really, if you move on to the next swing, which is March 20th, really what that will do is that'll get you inside the all-time swing point high of March the 2nd. The low there is 108.59. The high is 109.42. So any close today above 108.38, and that really becomes your target. That is the March 2nd area. Volume yesterday, well, we had the swing point here back from March 26th. That was tested on Friday with light volume. 46 million was going against 47 million shares. Even on options expiration Friday out there. Yesterday, you're pushing into the swing point here from April 13th with volume because April 13th only had 17 million shares. Yesterday, you were pushing into it with 28. That said that likely the top of that swing point was going to be tested. We've got that right now. If you get a close above that, that says you move on to the next step in the journey out there. So 108.38 becomes the level to be watching inside of the QQQ ETF series. If we go take a look at the Russell 2000, the IWM. Of course, the Russell 2000 is strong like bull out here. The Russell 2000, couple of confirmed A to B equals CD, up patterns out here. The Russell, the B point was taken out from March 23rd. That had 17 million shares. We saw a close above that on April 15th with 37 million shares. Since then, it's failed. It's come back into the lower part of that range out there. Right now, what the IWM is doing is just filling the gap from April 17th, April 16th, April 17th. We had a gap down with 48 million shares. Yesterday, you were up with 24 million shares. The low of that gap having been tested here, I believe, this morning. Let's go take a look at the low of that gap. Is priced out at, come on, there we go. Oh, geez, maybe I got to actually grab the actual tool for it to take effect. There we go. 126.16. Now, that swing point out there, well, that's not even the swing. That's just the gap out there, 126.16. The swing point itself has got 37 million shares. That's from the prior day, April 15th. You've done 3.7 million shares. So actually, we've been trading for 45 minutes, 4, 6, 24. It's moving into the IWM, moving into that swing point with light volume as we speak right now. So no volume behind the move inside the Russell 2000 as of 10:13 a.m. If we take a look at the SPY out here, the SPY here yesterday tested a swing point, which was from April 15th. That had 99 million shares yesterday, pushing into it 92 million shares, light volume. Nonetheless, you are into it today. Any close above 209.95 says that the SPY would go test 211.04 out there. That is the high from April the 15th. The SPY still has not tested the February 25th level, either 211.22, that's the low, or certainly the high, 212.24 out there. We can see that the price is traveling with inside its TAS market profile. So within that box, no breakout, no nothing. Any close above 211.11 out there would be bullish for the SPY. If we take a look at the diamonds out here, the diamonds trading lower with 1 million shares, 27 cents lower this morning. What the diamonds have done, what they did yesterday. Yesterday, they moved into that April 16th swing point out there. That had 3.8 million shares. Yesterday was a push higher with volume, 5.3 million shares. Said price would be up there to test it again. That's what we have seen thus far out here. And what does that mean? Yeah. What the diamonds did here is they pushed lower into the swing point from March 26th. That had 6.6 million shares. They pushed lower with 8.6 million shares. So what the diamonds are saying is, guess what? The consolidation is not over, and more than likely you're going to see another test of that 177.30 area. That's what the message thus far inside of the Dow diamonds is. If we go take a look at the summation index for the Dow, she is just below that zero line. Let me expand this up on my chart for you out here. It's a great tool out here. The trend is your friend. We've had a lot of choppiness in the trend formation out here. We saw Friday's price action truly push the pedal to the metal to the downside inside of the Dow, pushing that price oscillator to the downside. The sellers should have been able to maintain control of the ball yesterday. They did not. So one day down, one day up. I do not know how Tuesday, April 21st is going to end up. But if it does end up back below the zero line, well, it just sets up nothing more than frustration for most traders out there. But, of course, frustration would be the name of the game for 2015 thus far, because, if we do take a look at the Dow, I'll take a look at it elsewhere on a different chart out here. Well, let's just do it this way. We put up the Dow here. Let me do this. Let me do this. Well, that's the diamonds, but let me just get a little clean chart out here, style template. Make it nice and clean for the folks at home. And we actually will go put the actual Dow in here. I could do the diamonds, but INDU. We'll go ahead and we'll put a quarterly time frame out here. Here's our quarterly time frame. We could do the monthly, but let's just take a look at the quarterly time frame. Here's the quarterly time frame. Here is the open on January 1st. That open 17,823, and you are trading at 18,000 even, about 18,000 even or so right now. So you can see, basically yesterday's move, the market has moved basically nowhere. Now, is that a bearish sign? The answer to that is absolutely not. What we know about the Dow specifically is the fact that it's just simply, we know about the Dow. We took a look at there during the first hour. The Dow is actually above its hurdle level of its horizontal trading range boundary number out there. That's at 17,853. This is a monthly chart we're looking at. If we see it close above 17,853 at the end of the month, which I suspect we will, even if we see one more drive lower, one more push lower in the markets, I still looks to me like the Dow will finish above that line and signal that it wants to move up higher, 18,787. If it doesn't, says that what happens is price probably comes back down and tests the rising trend line. That's the white diagonal line going across my screen on the chart. That was coming off of the lows in 2011. That was testing the lows in 2012, November 1st, the month of November in 2012, which also was a test of that October low in 2014. So that takes care of the ETFs out there. If we take a look at on the summation index, let's just go back to that. So the Dow flirting with the zero line. Not a lot of flirting going on right now inside of the NASDAQ composite. Up above it yesterday, extending the gains. What the NASDAQ composite is doing today, it's trading into that March 20th swing point, the bottom of which is 50.20.07. Any close above 50.20.07, price will move up and test 50.42. Let's take it over to the longer-term chart out here. Let's go take a look at the NASDAQ composite. Let's go see what it is doing, because we can see on the daily chart, we can see on the monthly chart, these levels of resistance out here. As we take a look at the monthly chart, you're going to see the price level that it's struggling with is 5,046. Back to the daily chart. What did we say on the daily chart out here? We said that that high, swing point high, was 5,042. So just testing 5,042, if in fact that's what it does, just closing slightly above it, 5,042, is no guarantee that you're going to knock it out of the park inside the composite. What you really need to see, what the composite needs to show both you and I, is a move above 5,047 at the end of this month. Any move above that, people will be saying, it's just going to go test the swing point high from March of 2000. That swing point high, 51.35. I say, You get above 5,047, 5,046. If you come back and test it and reject it, and guess what that says? That says liftoff. It says price will move up to 59.72 over the long haul. This is Steve Rhodes with TFNN. We got some flat markets out here. Well, the composite's up 23 points. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. During the break there, just chatting inside our Tiger's Den. If you haven't checked out the Tiger's Den, come on over to our Tiger's Den. Come on over to the homepage at TFNN.com. You can check that out for the next 30 days. You'll see our charts out here. A lot of great traders out there. You know, it's always about when you're trying to take your game to the next level. It's really always about being able to get to a better peer group. That doesn't mean you leave others behind. You always take folks with you. But truly, you know, if you think about sports, if you're an athlete out there, and you don't have to be an athlete, you could be playing. You could be an athlete of playing poker, for example. If you want to become a better poker player, you know, play in bigger games. Play with better poker players. If you want to become a better tennis player, play with better tennis players. If you want to become a better trader, play with better traders. If you want to be able to take your mind game to the next level and hang out with people that have experience in being able to do that. I've got a way for you to do that. I'll talk about that in a moment. But inside the Tiger's Den, we're just simply showing folks the futures contract here, the daily futures contract for the S&P. You know, there are very clear consolidation patterns that are going on inside the market. We talked about that just briefly when I pulled up the Dow chart. Since January 2nd, it's basically up 170 points. That was, you know, in essence, yesterday's gains, you know, less a few points out there. If we take a look at, now the cool thing about consolidation patterns, really two things about them. Number one, if you're going to sell, you want to sell from the top, from the highs. That's in the 2108-ish area. The high here this morning on the 30-minute chart that came in at, 4 o'clock or so, gave you that nice little seventh inning wave stretch pattern to the upside, that G pattern. So that's the easiest trade in the books out there. So you trade it to the short side from up there. You trade it from the long side from the bottom area, 2033. You have your stops on either side. If either get taken out, what happens is the preponderance of evidence is that your move is going to be equal to or greater than the actual consolidation area. That says any move above 2110, 2108, somewhere around there. And I'm not talking by a point. I'm talking, you know, with some kind of significance behind the move. Says that you've got another 70, maybe 75 points, something like that, to the upside. Likewise, any break below the 2033 level that says that price could move 75 points to the downside. Otherwise, and the thing with a consolidation for those, because it can be very frustrating for those that it is to recognize it as quickly as you can. See, it's really all about pattern recognition. That is at least what I do here. I know that's what everybody, for the most part, does here. You know, it's a pattern recognition. And when it comes to pattern recognition, I guess I've got to put this, see if I've got this chart up on the screen out here. Do I have that? No, it's someplace else. Oh, darn it. When it comes to pattern recognition, but that was real smooth, wasn't it? No, that wasn't it. It was not very smooth. You don't really have a better smooth transition than that one. But when it comes to pattern recognition, you guys know this. You've seen this chart before from me. That's this. This is my little trading pyramid. That says that, any table stands better when it has 4 legs. I believe that is true with the markets that both you and I trade. And that says that the 4 legs, as I depict them, are understanding supply and demand. That's what we like to call volume around here. You can just use volume, or you can use any one of the different indicators that are available to you. On balance volume, money flow index, there's a number of different ones. When it comes, that's leg number 1, or that's a leg, doesn't mean in priority. Leg number 2, momentum out here. It's really important to understand the momentum, and you get several different tools that you just want to master. Just simply one of them, the one that works best for you. Could be the relative strength index out there. I like that. Could be the stochastic oscillator. That's one that Basil focuses, but he's an expert at it. Just as I believe I'm an expert or a master at the relative strength index and how to use that to help to identify tops and bottoms, short-term, long-term, any kind of term out there. But that's to help us identify momentum, right? When we have Stevie's price relative strength divergent pattern show up, what's it telling us? It's telling us that it's losing momentum. Why do we put such great emphasis on that? Because when you're losing momentum to the upside or the downside, it's the way of the market being able to communicate to both you and I out there. These are just simply patterns that exist inside the market. You also want to understand liquidity, right? Or volatility. Bollinger Bands are a great way to watch price, both to see liquidity come into the market, liquidity dry up, going between the top and the bottom of those channels out there. Keltner channels are another great way. The standard deviations are another great way to be able to do that. And then finally, that 4th leg out there is the energy, the angle, if you will. You can use the A to B equals CD tool to help you understand the angle. You can use the power law vector indicator, one of the greatest tools that have been invented. Of course, that's been invented by David White out there. Of course, you can also use the MACD, another great way of being able to utilize that. I know we have a trader out there. What's his name? Guario, I think? He uses the parabolic SAR out there. Look, just use every leg always stands better with 4. Every table stands better with 4 legs out there. Those are the 4 legs of the market out here. That's what we like to take a look at. Right now, we're in a consolidation market, and until it breaks one way or the other, you should trade from an intraday standpoint. We'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is off 35. S&P is flat, 2101. Composite up 21 points. Russell is up about 2 as we speak right now. Now, for the last 35 years or so, it began back in the 80s, in the mid 80s. I was fortunate enough to at that stage of the game, I was in the personal computer business. Right, was selling personal computers throughout the state of Florida. Started a division of a publicly held company back in 1983. We went from $0 to $100 million in 5 years. So there was a lot of growth that was going on during that time period, and it afforded me with an opportunity to really, especially as a young lad out there, to get some pretty cool education, because we were IBM, Apple, Compaq, you name it, Epson, whoever else was around at that time, Sony, all their largest resellers of products. And IBM had sponsored some different training programs up at, it was a combination between IBM and Harvard. And at the school, they had a guy named Earl Schoaf. Earl Schoaf came in and did a workshop, part of the workshop, and part of that workshop, and it was really based upon the founder of IBM's philosophy, Watson. He would get what he would do, his secret to success. Yeah, IBM's been struggling a bit here. Maybe they need to go back to the old deal. But what they would do is before they would make a presentation, whatever it would be, before they would make a presentation, when they thought they were done, they would then spend the next whatever period of time figuring out what it was that they blew. Why did they lose the deal, right? It's kind of like trading and investing. It's being able to look at both sides of the trade. You might have some signals that help you to get in on the long side of the trade or the short side. You've always got to come back and take a look at the other side of the trade. That's what Watson was key at doing. Well, this guy named Earl Schoaf really had the same kind of thought process out there, and the thought process was just trying to understand. Now, he took it a little bit different. He was taking a look at what I like to term, he didn't use this term, but I like to now use it, the human pattern recognition out there. And you see, now Earl Schoaf, the interesting thing about Earl Schoaf is he ended up being the mentor to Jim Rohn. Many of you may know Jim Rohn out there. Sometimes people utilize these guys or these names, or they think of them as motivational coaches or speakers out there. Those are the folks that have never taken a not a Neural Shof, because but a Jim Rohn type of course, or listened to his stuff, or read his things out there. They're not there to motivate you. Motivation lasts for how long? You get motivated around New Year's Eve, if you will, to be on a diet. But a diet is a diet, it's a way of, if you're going to really want to lose weight and be healthy out there, it's more than dieting, right? It's a lifestyle change that you've got to make motivation. These people don't spend their time trying to motivate people. What they do is what they're key at, and what you need to be key at, each of us do, is just simply be masters of influence. You see, it's all about being masters of influence. And the way that we do that is by being able to understand our mind out there. I mean, that is the key. Now, Jim Rohn happened to be the mentor to Tony Robbins. So everything kind of went full circle for me. And so in each of those three guys, I consider to be mentors. For the last 30 years, I've been understanding their technology. In fact, Tony went ahead and he got together with a gal named Chloe Madonis out there. And the two of them, you see, I started taking those courses, whether it was done through DVDs or live sessions out there, to be able to improve my game, to be able to improve my thinking. Because the reality is, it's all about our thinking that really is going to impact what it is that we do. Because doing what you know, knowing what to do, there are two totally different things out there. And we really don't spend enough time talking about the psychology, whether it's the psychology of trading or the psychology of life and what takes place out here. And that is just simply so important. So here's what I'm going to do. On May 7th and May 14th, so in a few weeks, May 7th and May 14th, I'm going to do two 45-minute workshops on human pattern recognition out there. Now, I'm going to be giving you a number of different tools that you're going to be able to utilize. Now, this is taking thousands and thousands of hours. So if you wanted to go on the same journey, maybe some of you have started on the same journey, where I've spent the hours, the time, the money, because see, my whole deal is not to motivate you. It's about being able to give you tools. That's why I do this show out here. It's to be able to give you tools, to empower you to take these tools and go off and accomplish all the things that you want in life. If it's whether it's health, whether it's wealth, whether it's relationships. And that's really what I'm going to accomplish that's what I'm going to begin to accomplish. I can't accomplish it all in an hour and a half, but what I can do is I can condense, thousands of hours, decades into, those 2 days that I do, and immediately get right to the chase, so that we get rid of all the noise out there and get right down to it. Now, if you're a newsletter subscriber, you get access to this. So I'm really psyched about being able to share with you and talk about human needs, 7 human needs, how important, and it's going to be able to teach you and understand. You're going to be able to understand what influences you when it's all said and done. I want you to be able to understand that, so that you then, and so some people, it's about being able to overcome fear. We'll be able to discuss all those types of things, and we'll talk more about it. I want to take up all the time here during this segment, but I do want you to take advantage of it. If you've never been a newsletter subscriber, then now's the time. Come on over, sign up for my newsletter service, Mastering Probability. That will go ahead and get you in. If you have been a subscriber before, then that means you've been to some of my workshops, and you know what it is that I put into those, and you know the valuable information that you're able to glean for that. So that's already a no-brainer. So for $97, you're going to have what basically I've spent. Now, what I did, so when I first started those programs, it was like attending as if I was a student. I then sat back about 6 years ago and said, okay, I want to understand exactly what they're doing. I want to, much like I've done here with regard to mastering pattern recognition when it comes to trading the markets and different tools that we look at. And I said, I want to learn what they're doing. I want to understand that magic. I want to understand the steps behind that. And that's what I've done for the period of the last 6.5 years out there. And now I'm ready to unleash that power within me and be able to share that with you. So please join me. Come on over to the homepage of TFNN.com, The Psychology of Trading. You will be so happy, because this is going to help you not just be able to help you in your trading and investing, but any endeavor it is that you are dealing with life. If you're looking to be able to have better relationship, if you're looking at ways to be able to improve your health, it's about really being able to understand your decision-making process, what things are getting in the way, and how you can break through, because it's really all about being able to break through right now. These markets, they're not ready to break through right now. They will when they do break through right now. We know that the NASDAQ, as an example, when it gets ready to break through, it's got a 200-point breakthrough consolidation pattern out here. That 200-point 200-point consolidation pattern is from 42.70 to 44.73. That's what we're looking at on my screen as we speak right now. It's a 200-point consolidation. Just as we took a look at the consolidation inside the ES Mini, it's not ready to break through. If, in fact, we see these summation indexes all turn to the downside today. Composite, we're not there yet. Inside the Dow, we are. Inside the New York Stock Exchange, we were below zero yesterday. We're below zero today. So it's struggling. What does that mean? I'm going to help you anticipate what that means. It does not necessarily, to me, mean we're going to go back down to the bottom of the consolidation patterns out here. That I have, that I don't subscribe to, because I believe that the market wants to make one more push lower. Now, that push lower can take a couple of days, but I do believe we're in the process. And here's my deal. Even though I anticipate these things, I still always come back and take another step and try to take I take a look at both sides of the trade to see if there's any piece of information that that we're missing out here, and then just simply check my anticipation at the door and come back and actually take a look at what the stock market is doing out here. Where is it that ideal bottoms basically form, and what are the patterns that are associated with that, as well as the tops inside the market. That's really all that we can do. And then the most important thing that any of us can do, and trading and investing is a lot easier than almost anything else in life, because here you've got stops in place. You have physical, hard stops that are in place that help you to protect your assets out there. A lot of other things that you do in life, your risk, you don't have a stop in place. When it comes to relationships, what stops are there that are in place out there? You don't have stops in place. When it comes to trading and investing, it's really the thing that people fear the most is losing. It's just losing, period. And certainly losing money is right up there. But when you really start utilizing a system where you evaluate the trade before you get in it, you have one cancels the other. That means you've got both sides of the trade figured out. You make adjustments along the way out there. That's a beautiful way to trade. That's the way that I want you to be able to trade as well. In any event, right now the Dow's off 64 points. The S&P is down 1. Let's go see what's going on inside of the Dow. Let me go ahead and see if I can pull up the Dow 30. Do I have that Dow 30 handy? I don't. I can still open it up another way out there, but when I open this, I've got so many different. Let me see. Where's the Dow 30 out here? Here we go. There's the Dow 30. I have so many different pages. If we take a look at the Dow 30, I just want to see what is going on to the downside. Where's the biggest loser, so-called, coming from? It looks like Travelers, DuPont, McDonald's, IBM, Caterpillar, 3M, and Boeing leading the charge dollar-wise, percentage-wise for the most part to the downside. To the upside, you've got Visa, United Healthcare, Johnson & Johnson, American Express. Let's take a look at Travelers. I think they were out with numbers here before the bell this morning. Travelers is down with about 1.5 million shares as we speak right now. Now, Travelers, as you can't really call it so much a consolidation. I would have to say that Travelers has basically a floor out here, and that floor, takes us back to about the time frame of November in 2014. Now, the swing point out here that Travelers is going to deal with, that it's trading into, that most recent swing point was from February 2nd. That swing point is 2 million shares. The low of that swing point is 101.94. You're into that swing point with 1.5 million shares an hour and 15 minutes of trading. What do you think the chances are that that low is going to be tested? I'd have to say PDG, right? Pretty darn good that that low is going to be tested. So Travelers should make its way down to 101.94. And if it breaks through that area, well, then there's really nothing to keep Travelers in place from doing anything but breaking all the way down to the swing point low, because there's really no floor established. I would say Travelers would move down to anywhere between $95 to $90 or so if it breaks through 102.11. I'm not saying it's going to break 102.11. It's a pretty decent floor out there, but it does look like that area is going to get tested. That's what's going on in ticker symbol TRV. If we take a look at DuPont out here, DuPont down about 2.5%, a little over 2.5%, down $1.94. Let's go see what it is doing. This is the daily chart that we're looking at. In the case of DuPont, it's taking on a swing point. That swing point looks like it is 70.58, 70.62. It is the trading day of April Fool's Day, April 1st. 5.3 million shares. It's done 3.3 million shares already today. If DuPont takes out that low It actually sets up a kind of a large A to B equals CD to the downside. Let's pull DuPont back a little further, see what else maybe it could be doing out here. It's got this swing point. Well, here's what it's doing. It looks like if it breaks that swing point, then I'd say that makes the case that it wants to trade down to October 15, 2014. That's got 12 million shares down there. That's somewhere between $64 to $66. Ticker symbol DD. Has not taken out the low just yet. It's kind of an area where it's got a base that has been holding it in check out here really ever since January of this year, January 2015. McDonald's is trading to the downside off 1 4/10% out here. Mickey D's, if we take a look at it, now McDonald's here broke through a descending trend line, and it did it with conviction. It also went ahead and it repaired a window that was between 97 and 96 out here, so we can get rid of that. That's no longer an area to be concerned with. In the case of McDonald's, this thing has pulled back into an area where it had broken out recently. So what McDonald's ought to be able to do is find support somewhere between 93.60, 94.80. It's trading right now at 94.83. As an example, that breakout had volume of 16 million shares. You're pulling back today with 1.6 million shares. If this area fails, meaning 93.69, then the area where McDonald's is likely to pull back to is going to be the prior breakout, the prior gap, which is 91.26 to 89.74. That is what's going on. That's what's going on inside of McDonald's out there. If we take a look at, moving to the upside, let's go take a look at strength now. Go the other side of the trade. Let's go take a look at Visa. Well, if we take a look at Visa, there is not any strength out here. Let's take a look at its descending price channel that it's traveling within. So Visa has a pretty clear descending price channel. At least the top is real clear. I would say the bottom is pretty clear as well. Let's just move this up to the side. So right now, if Visa is moving higher, Visa likely to run into resistance if it were to move higher today. 65.88, 65.70 or so would become the resistance. That's its descending price channel out here. If Visa can break above that, then that's a whole different scenario. I don't see any type of Gartley pattern or anything in place here for Visa as we speak. You got United Healthcare. That's up 69 cents. That's up about 0.5%. Out here, here's a daily chart for United Healthcare. United Healthcare just consolidating really up at the highs out here. I don't see anything too significantly bearish for ticker symbol UNH. Right now, the Dow, she's down about 59 points, 61 points. The S&P is flat at 81 cents. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 48 points as we speak right now. S&P turned just slightly green out here. The composite's up 20 points. Let's take a look at Apple. Apple's off 77 cents out here, 14 million shares. Not really doing much, just continuing to trade sideways, really as it has since the March 5th time frame out here. So Apple not playing any of its cards as we speak right now. So what is it that you want to focus on and look for today? You know, I'd say a couple of things. We've really discussed them as we speak right now. But let's just hit them again. The New York Stock Exchange, if it sees more than, where's that number, 170 something? That's my recollection. 170, 180, 187 is the number. If you see more than 187 net advance in issues, you're at 306 right now. You know, it would say that the New York Stock Exchange is saying last Friday was the low. Now, what that also means, though, is there's some resistance up above. It was the low, but what needs to occur inside the futures market is the ES mini is going to need to close above the price point of 2108. So that'd be the second thing that you would be looking for. If there's a close above 2108 inside the ES mini, then you're looking at about a 75-point move to the upside out there, and being short would not be the message out there. Otherwise, we're still inside the consolidation. The Dow is struggling. Its summation index is back below the zero line, but just kind of squeaking below the zero line. So, you know, and I would go with the composite and the New York Stock Exchange and not worry so much about the Dow out here. Right now, things are, in fact, in the case of the composite, it needs 99 net declining issues. We're not there in order for its price oscillator to turn back below zero. But at this stage here, it looks fairly decent. And those are really the things to look at. We've got, I notice here that the euro yen has just turned slightly green out here. It's really just been consolidating sideways, but that headwind basically has gone away for the moment. The euro is up off of its lows out here, so maybe it's Super Mario. He heard my comments. It wasn't really my comments. I was just repeating his comments where he was saying to folks, go ahead, I dare you to go ahead and continue to short the euro out there. And maybe he actually means it. I don't know. I don't know what that guy. I know that guy is in charge of a marketing campaign. That's what I know. We've got to really go take a look at his balance sheet to really understand what they're doing out there. I mean, because the proof is always inside the pudding out here. Gold's not doing a whole lot in the case of gold. Just simply watch the price point of 1189.20. If it closes below that, price should move to 1179 and then below. But what's likely going to happen inside of gold is that we took a look at how it's trading closes. We're just taking a look at the closes here. We're trading within about a 10-point range out there. When that happens, the way that gold works, it is hold, 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 and then bang. And I do not know whether that bang is going to be to the upside or the downside. And I could be proven wrong here. It won't be the last time. It certainly isn't the first time, but that is likely the pattern that is in play inside of gold. We're going to see which way the pop is going to take place. Right now, it appears as if the pop is going to take place to the upside, but there is likely going to be a pop. With regard to the VIX index, not a whole lot to be paying attention to as we speak right now, unless the VIX were to get above 1471. If the VIX is above 1471, then you've got real damage going on inside the marketplace. Otherwise, it bodes well for the bulls out there. So, folks, it's Terrific Tuesday. Get on over to the homepage of TFNN.com. Go sign up for my workshop or sign up for the newsletter service. That's the easy way to do it. Get into the workshop on May 7th and May 14th. Stay tuned. Our man Basil Chapman is up next. Time to go ride the wave wherever it is you are. Have a great Tuesday, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.